Beata Bukowski coming to you from Fairway Independent Mortgage with our weekly economic update. Home prices appreciated. According to Case-Shiller Home Price Index, property values went up 16%, a little over 16%, while the new and existing home sales dropped in June. The new home sales dropped 6.6%, while the existing home sales, contracts for properties previously occupied, dropped 1.9% year over year. When you look a little closer at this data, especially with the new construction drop, which was substantially lower than expectations of 3.4% gain, it is most likely strategic on the part of developers who, while holding on to permits, have not started construction because of labor challenges, as well as the cost of materials, which obviously affects directly their bottom lines. And this is a move to protect their profits. Meanwhile, rents are continuing to accelerate per Zillow as the rent index rose 1.8% in June for a total of 7.1% year over year. This comparison, obviously to last year, is a little skewed thanks to COVID-19, but the index did rise 5.1% only since March of this year. Consumer inflation was up 0.5% in June per the Fed's favorite measure of inflation, which is called personal consumption expenditures. This was still a little bit lower than expectations at 3.5 versus the expectations being at 3.7, but it will be very closely watched. Speaking of the Fed, their two-day meeting has ended last Wednesday, with the Fed saying that they're going to continue their stance at buying back mortgage-backed securities, as well as talking about inflation in a transitionary manner. We shall see what happens there. Lastly, the GDP was the reading on the second quarter of the GDP showed up that it was only up 6.5%, whereas economists were expecting a whopping 8.4%. There's a lot of companies that are struggling with their inventories. As they cannot fill their inventories, obviously it is directly affecting this GDP. We are being told that as soon as these inventories are going to be filled, there is obviously very good potential for the GDP readings for the future to be showing much stronger numbers. Lastly, Case-Shiller Price Index has shown values going up about 16.6% on year-over-year basis. The hottest markets still remain Seattle and Phoenix. Thanks very much for tuning in. All of our eyes are on the employment report that is due on Friday. You take care and have a wonderful remainder of the week.